You've probably noticed Opendoor's stock has been moving all over the place lately. One day it's pumping, the next day it's red, and everyone on social media seems to have a different take on what's really happening. But here's the thing most people don't realize. There's something bigger going on beneath the surface right now that could determine whether this stock doubles by the end of the year or crashes back to where it started. Because behind the scenes, we're seeing short sellers shift their positions, big institutions quietly buying dips, and retail traders fighting over whether Opendoor is a meme stock or a real recovery story. And if you look closely, the data actually tells us something really interesting, something most people are missing entirely. So let's break it down. What's really moving Opendoor right now? What are the charts saying? What are the whales doing? And what's the sentiment across the community? And more importantly, is this actually setting up for a short squeeze in the next few weeks? All right, let's get into it. And if you enjoy content that dives deep into the real data instead of hype, just tap that thumbs up button. It helps a ton. So Opendoor was down about 3.6% today, trading around the $8.69 range after hitting a high of $9.60s earlier in the session. Volume was light, only around 140 million shares traded, compared to the usual 330 million average. So yeah, slower day. There were no official press releases, no SEC filings, nothing big from the company. But there was one interesting thing. CEO Carrie Kaz appeared on a podcast, and honestly, that interview was surprisingly solid. I'll admit, I wasn't a huge fan of him early on. A lot of us were skeptical, especially when the company struggled a couple years back. But over time, he's been proving he actually cares about changing Opendoor's direction. One of the reasons people are warming up to him is how he interacts online. There was this one thread where someone said, "Opendoor just offered me $150,000 below market for my house. Their model is broken." And instead of ignoring it or hiding behind PR, Kaz literally replied, "DM me your address." That's a level of accountability and confidence you rarely see from CEOs these days. Now, I've said it before, Opendoor used to be a mess. The business model was struggling, investors lost patience, and the stock was basically dead money. But under Kaz, the company's slowly shifting. You can see more transparency, better pricing strategy, and a lot more confidence coming from leadership. But here's where things get weird. A new ETF just launched from Roundhill called Meme. And yes, it's exactly what it sounds like, an ETF tracking meme stocks. And guess who's number one on that list? Yep, Opendoor. Plug Power's right behind it at number 2. So I guess that answers the big debate people were having online. Is Opendoor a meme stock? Apparently yes, at least in the eyes of this ETF. But personally, I think it's more of a momentum stock now. The fundamentals are improving, but most of the short-term moves are still driven by traders and algorithms. The funny part? Being labeled a meme stock isn't necessarily bad. It means more visibility, more liquidity, and institutional exposure. So ironically, that meme label might actually help stabilize things a bit. Now let's talk about the community side, because that's also affecting the stock. There's been this ongoing drama between Eric, one of the loud voices in the Open Army, and Amit, another influencer who's been bullish on Opendoor for a while. Normally that kind of stuff wouldn't matter, but in this case, it actually does. Because when Eric appeared on Fox Business with Charles Payne recently, the stock literally jumped. So like it or not, these personalities are moving price action. That said, the back and forth drama doesn't help. It makes the community look messy and unprofessional. If Opendoor really wants institutional money to take it seriously, the community leaders need to focus on facts and analysis, not ego fights on Twitter. Anyway, back to the numbers. Short interest is climbing again. About 20.3% of the float is now being shorted, which equals roughly 143 million shares. The average cost to borrow sits around 2.4%, a bit lower than normal, but still showing pressure. What's interesting is that despite the increase, short sellers aren't piling in aggressively. There's still plenty of available shares to borrow, which means if they really believed the stock was overvalued, we'd see much heavier short volume. That hesitation might actually signal that some shorts are nervous about a possible upside move, maybe even a squeeze if momentum kicks in again. Looking at options data, there's about $33 million in call volume versus $5.8 million in puts, with roughly 46% of the total flow leaning bearish. That's a mixed bag. It shows skepticism, but not total disbelief. A lot of traders are betting that the stock will hover around that $9.50 to $10 range in the short term. And that's an important zone because that's where you start to see institutions and retail overlap, both sides playing in the same area, which often leads to volatility spikes. Now on the dark pool side, we've got some decent-sized prints, 3.2 million, 1.3 million, 1.1 million share blocks, all of that lining up with the lower volume we saw today, and you can pretty much tell that algorithms are doing most of the heavy lifting right now. Retail activity's quieter, but algo trades are still filling the volume gap. From a technical standpoint, Opendoor's sitting right in the middle of a pretty clean range. The next strong support is around 7.65 cents, while the next big resistance sits near 10.23 cents. If you're a short-term trader or swing trader, watch that 8.89 level. That's a key pivot. A close above that could trigger a run back toward 9.30 or even retest 10s in the coming sessions. Also keep in mind, Jerome Powell is speaking tomorrow morning. And whenever the Fed talks, stocks tied to housing, like Opendoor, tend to react fast. Any mention of mortgage rates, inflation trends, or housing market outlook could easily swing this stock 5 to 10% in either direction. Now, even with today's dip, Opendoor is still holding above its 10-day moving average, which is a bullish sign. It means the short-term trend is still intact, even with weaker volume. The flow data shows more buyers stepping in than yesterday, but a lot of sellers are still sitting there waiting, which is typical when the stock's consolidating before a move. Bottom line, there's not a ton of breaking news here. It's mostly speculation, sentiment, and technical positioning driving the action. But when you piece everything together, rising short interest, inclusion in the meme ETF, low float liquidity, and a strong retail base, it paints a setup that could explode if a catalyst hits. So the real question is, what happens next? Does Opendoor hold that momentum and finally break $10 again, or do shorts drag it back under $8.50? Let me know what you think in the comments. Is this still just a meme trade, or is the company starting to earn back its real value? As always, if you got value from this breakdown, hit that thumbs up, subscribe, and turn on notifications so you don't miss the next update. I truly appreciate the support. It helps keep this channel growing and lets me bring you more no BS market content every single week. And remember, this video is for entertainment and educational purposes only. It's not financial advice. Always do your own research before making any investment decisions. Thanks for watching, and I'll catch you in the next one.